Raja, how overnight a ship reportedly got struck by a missile in the Strait of Hormuz, causing stocks to fall quite sharply at one point. In this video, I'm going to explain what I saw in that particular move that was quite interesting, and also talk about a potential regime change that's been taking place in markets over the last few weeks. So firstly, when the first reports came out of a ship being hit in the Straits of Hormuz, we saw equities, including tech stocks, fall very sharply. Now, they subsequently regained some of that. Now, what I find very interesting was that at the same time, if I look into FX markets, the dollar didn't jump considerably. It had more of a gradual increase. So what does that tell me? Well, it tells me that equity investors are far more nervous right now than, for example, currency traders. That's an important thing to understand. It's why I look at markets in this way, by comparing various markets, because it gives me a better understanding of how each one is reacting compared to other ones. So equity investors last night clearly more nervous, more fragile right now as well. That's something, the first point that we need to make. Now, the next point I want to talk about is this potential regime change that's been taking place, because it could drive markets for quite a while yet. And that is basically in terms of the US dollar and how that is affecting other markets. So we saw through the Gulf War that the US dollar, there were shortages of the US dollar, so the dollar was rallying. And I think people thought this was going to be a short-term thing. When the war finished, the dollar would fall again and demand for dollars would decrease. But that hasn't happened. And I think it's because of a few reasons. Firstly, I think that dollar shortage during the war has made some countries feel like they need to kind of start to stockpile dollars again. They don't want to be put into that situation again. Secondly, we've had some large IPOs and bond issuances over the last few weeks in companies that investors all around the world wanted to be part of. So Google, for example, their parent company Alphabet were issuing stocks and bonds, the SpaceX IPO. This created a demand for billions of dollars from foreign investors investing into the US, that of course also driving up the dollar. And of course, thirdly, we had the WASH press conference that some people took quite hawkishly, and again has changed their opinion on US rates and potentially the US dollar as well. Now, all of that has the potential to continue for a bit longer. And what that could mean is, for example, emerging markets, you're sucking money away from emerging markets towards the US. And this is a danger for countries like Korea, Indonesia, India, etc. And what I find interesting was there are some similarities with the first Trump administration. The first time Trump was in office, we saw the dollar fall for the first 2 years as investors sort of fled the US amongst all the kind of panickiness and all the craziness, but then comfortable with it. And the last 2 years of the first Trump administration, we saw the dollar rise as well. So if that continues in that way this time as well, then you need to keep an eye out for that if you're trading in emerging markets, but also importantly, gold and silver. If the dollar is now on a sustained period of rallying, if that continues, then that is bearish news for gold and silver, and gold and silver traders must watch out for that. And one last thing to note is how the breadth of that tech rally is really narrowing even more now. And what I mean by that is that we saw some big names like Apple fall yesterday, Microsoft as well. And really, it's only the AI stocks that are left now that look strong, and everything else looks a little bit weak. So that really is a precarious situation for equity investors right now. So lots to consider as we head towards the weekend.